Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Thursday, June the 20th, 2013. We'll be looking at several major markets today going around the globe, so it's just going to be a really important one. Whenever I'm looking at this chart, the Australia market, AORD, we talked about this before. It was the first one that was rolling over and peaking, so forth and so on. We took advantage of that. The downside, again, AORD. And this particular chart here is more advanced than you're seeing the U.S. markets, but it'll give you some information as what to expect for U.S. markets, and you've already seen the same thing happen in Europe and so forth and so on. So we'll look at this and see what we can learn. Remember back in this time period we had this rally here, and then we pulled back to that level, and we told you there was no hammer candlestick formation here or here, and that means that this wasn't actually going to hold, and we're going to break through that. That's exactly what happened. We got the sell signal at this point, and we showed you that time. I think I pulled up a 6-month chart, and I showed you we had this channel that was going on, and you could actually measure that channel out and get an idea of how far from this distance here mathematically, how far you expected price to fall before you got some kind of a bounce. There's another way to do this. I'm going to be using that today. And then the other way would be doing it like this. Simply look at the bounce here, pull back to that level, measure this distance like so, and then subtract from the breakout will be here down to that level, and you get some idea where to get the bounce. I see this now as an opportunity to get short again. The bounce has happened. You'll notice you're overbought on the condition, the ultimate oscillator here, coming back down at 63 now. Just getting started to the downside. We'll be taking this level out here. Alright, a quick glance here at the Dow Jones Industrial Average. This is exactly what I said it would be. Basically, you had this first leg to the downside. You had some little pennant formation here, and you drop out the bottom. This here will be pushed out through here. You have the second down leg there. We'll be testing this low here, and that's important because what's basically going on here, if we actually fix that, you can see that we had this move here, pull back to that level there. This is at the level here. At that particular point in time, you will start to see sell signals develop on this level here. You won't actually hold here. The reason is quite simple. You've just now peaked. All this right here is just the argument between bulls and bears of what's going to happen. Now bulls realize they're wrong. We talked about that before it happened. Told you when they took out this level, then bulls would realize they were wrong, and they would have to recognize that the trend had changed. We had this move to the upside. When we pulled back down, we took out some lows, and we came back and we tested the previous high. It failed, and we took out the lows. So now the trend has completely changed. No argument whatsoever by anybody who's intelligent, and you're coming down to test this low. Now, if this is your peak right here, this is just getting started, then now you want to be selling. When you get down to this point here, what's going to happen? Are you going to rally and reverse? No way. The reason is that the Fed's tapering talk, and the Fed going to be forced out to there's not a question to me whether or not they're going to taper. It's a matter of when. And so there's no reason and no way to rally into that. When the Fed starts to reverse its conditions that it's been producing, you're going to get more sell pressure and you're going to break down. That means that I can measure this distance from the high point down to this point here and say when I break out, when I close below this level here, I'm going to actually subtract this number mathematically from that point. It gives me a target of how low we're going to go. Much, much lower down here. Okay, so this is a big move to the downside. Take advantage of it by getting your money out of stocks or getting short. In case anybody's wondering exactly how does this work, this thing I'm showing you here, I'm doing this number here, it's basically the exact same thing we do when we're bullish. We just reverse or invert the entire mathematics. So you have this high point here down to the low point. Once you break out above that, you measure this distance here. You say, okay, well, that's the distance that I expect price to go before we get some kind of a top signal or something of that nature. And that's exactly what happens. You come up here, roll over, and you start to go lower. So expect the exact same thing. I want to point out a couple other things. Note the size of this bullish move and the size of this bearish move. Bears are completely in control of this market and have been for a while. And a couple of different things you can do to analyze that the way I've just shown you. You can also look at the fact that you're now closing below the 50-period moving average. Has not happened on the Dow Jones Industrial Average. This has been the strongest chart globally, and that is now broken. We've just closed below it. That's a massive sell signal for a lot of people. Another way to look at that would be the size of this particular candlestick. You'll notice it's much larger than any you've seen before, especially larger than any bullish moves. Again, showing that the bears have the strength here. They're the ones that are in control of this market. Look at the volume. Same overall condition being indicated. The strength is in favor of the bears and has been for a while. I covered the Dow Jones Transportation Average, the TRAN, yesterday. There's really no sense in me doing any more on that today. Basically, same overall story. You can watch yesterday's video if you missed it. This here, simply be testing this low. There's no hammer candlestick formation off this bottom here. That means we're going to take this level out, and we can simply do the math again, and we know how much, at least for a target perspective, we're going. Quick glance here at the French CAC 40 index, same basic overall story here. In this particular situation, we actually got stopped out. That sucked. It happens sometimes. When this happens, a situation where you get close to the actual stop loss limit, if you were using various different methods, but if you were using any of these tight stops or advancing your stops, you were stopped out. In this particular case here, you actually bounce up, came really close to it, and then reverse quickly lower. The main thing we talked about back when this happened here, no hammer candlestick formation, not a true bottom. The trend overall is still down. All you're doing is the same thing you're seeing on global markets everywhere else. You are taking out these levels, and that means do the math and you know what's going to be happening. Also, look at the overall conditions of the price activity to the ultimate, to the 50-period moving average, closing below and finding resistance at, and then pulling down to the 200-period moving average. Once you do this number here that we're indicating is going to happen to the downside, you'll be well close below the 200-period moving average. Everybody will know at that point you're in a bear market. Quick glance here at the MIB, the Milan Index. You can see in this particular chart, in the same basic overall pattern, nice move to the upside, roll over, and then come back down. No hammer candlestick formation, ergo the bounce is just a bounce. Sell signal here, confirmation here. We took advantage of that. And we have another sell signal here, and it makes sense because all you're doing is testing this previous low. You're going to fail, going to break through it, and we're going to measure this distance out from the bottom, and yeah, you know how it goes. Quick glance here at gold. Loving this trade right now. Unless you're a bull, then you're probably crying. That's all right. The main thing to talk about the stricter chart, you're showing 73 points to the downside here. It's actually more than that. It's closer to 100 points to the downside. Main thing here, this first leg to the downside we talked about when it happened. This is the first leg. This was just a bounce. We told you it was just a measured move, different ways to draw it out, but this is basically just temporary before you do this again out the other side. That's beginning here. So again, I see nothing here to be bullish about. Continue to advance the stop as we go, and we'll eventually get stopped out and find a true bottom, but right now just continue to trade this to the downside. The Hong Kong Hang Seng Index, pretty clear what to do with this chart. Sell it because it's in a downtrend. We talked about this when it was happening. This, again, being the same theory. You simply saw this move up here, roll over, go much lower, measure this distance out mathematically, and give you a target of how far price can go before you find some kind of a bounce position or something like that. We're not there yet, so you continue to advance the stop. We're short from way back here, and we've advanced the stop to this point here. Continue to do so. Quick glance here at the India Bombay Stock Exchange, or the BSE, same basic overall story. By now you should be catching on that we're globally rolling over, right? That's pretty clear to everybody. Alright, we're going to be testing this low point here, and then once we get the sell signal and the breakthrough, you measure this distance out and gives you an idea of how much lower you're going to be falling before your next bounce point. So again, lots of move to the downside here to come. I want to point out again, note the peak off the 60 line, bear market condition here. Note the resistance at the 50-period moving average, bear market condition here. Note that this 50 period, as long as price stays below this 200 period, the 50 period is going to start to move closer and closer to the 200. It will then cross in that death cross scenario, and that would then tell everybody else that, oh, we're in a bear market. Alright, quickly looking here at Japan iShares, same situation that we've been talking about. This is the first leg to the downside. This is the measured move, and then we are going to drop out, like we have done now, down here, and we'll be duplicating this massive move here out this side. So we have a lot of distance to still to run. This is basically like we showed you on the gold chart or the silver chart. This is basically the same thing happening right here. Quick glance here at the London Financial Times Index, or the FTSE. You can see this is very clear what's going on here. We actually got stopped out. We had taken this sell opportunity here. We got stopped out with this blue line here, and gets my stop. We came up here, bounced up here, stopped out, and then rolled over, and then today it started moving lower. I would sell it now. Why now? Why hasn't it gone too far? No, it's down 189 points. I don't care. This right here is what we're looking at. This distance right here is how much lower than the breakout you'll be going. So you have a lot of downside potential still here. I'm taking advantage of that. Quick glance here at the NASDAQ. This one, of course, looks like it has one of the stronger charts. It hasn't pulled back as much as you see globally, and that was great for a time. Now it makes it susceptible to a massive move to the downside here. And this is something that we've been talking about before. It's the same overall condition. You moved up here, you roll over, you start coming back down. You're going to test this low. We've already looked. You don't have a hammer candlestick, no hammer candlestick formation here. We talked about that when it happened. That means that those will not hold when they're tested. So we will simply do the math here, subtract this here from the breakout, and we know how much lower it will go. Okay. Right now my stop's still way up here. I could advance it whenever I'd like, but right now, for me personally, I'll wait for more selling down to this level, and then I might advance it. Quick glance here at the XOI oil index, the same basic overall rolling pattern. You can call it top head and shoulders top formation if you like this. You could do different various things with it. The main thing, you are just rolling over and going lower. I have advanced the stop to this point, looking for a test of this low. Quick glance here at the Russell 2000 small cap index. Nothing surprising here to tell you. You can tell it for yourself. Look at the ultimate oscillator indicating bear market, peaking at the 60 line, pulling back down, closing below the 50 period moving average. We'll be testing these lows here, filling these gaps as well along the way. I don't see any reason here to be a gap trader to the upside. I know that you do have a gap at this point here with the in a couple of charts, the Russell, I think the S&P 500 as well as the NASDAQ, but I want to point out you have several gaps below you as well. So to say I'm going to buy because we're going to fill that gap, that would be silly because you also have gaps below you. So it would be better to look at the overall trend, and that trend is clearly down. You can see this high point, lower high, lower low, lower high, lower low. Trends down, work with it, not against it. Again, quick glance here at the SPX or the S&P 500 large cap index. I want to point out again the gap. I recognize it, I see it. I would not trade anticipating that gap to fill immediately. You have gaps below you that can fill as well. And like I said before, you had a scenario where you were overextended. You were not actually tracking the global markets lower, and therefore once you started moving that way, you had to play again a catch up, and so the gap would be something that I already talked about. I told you that would anticipate that to happen already. Another couple of things to point out, I've already talked about this before. Here's the first leg to the downside. Here's the little flag formation, if you will, and then you're starting to do this same thing right here out this side. That means you're going to be testing this low. So we know, looking at this low, no hammer candlestick formation, lower series of lows, we know it's not going to hold when it's tested. So look at this overall pattern and say, okay, do the math and subtract that from the breakout point for how much lower you have to go. And it's a big move. Quick look here at silver, same basic overall condition as gold, still have a sell as of today. Another one set up here. We had actually, the signal was yesterday, then we got confirmation today with lower low and so forth and so on. This is the same thing basically. First leg to the downside, measured move, and then we're going to duplicate this out the other side, and that's what we're seeing happening here. So I'm advancing the stop as we go, looking to get stopped out eventually and lock in that gain. Quick glance here at the Toronto Stock Exchange, the TSX. This is probably the most telling chart for what is about to happen. You can see we had this massive move here, and this is an interesting one. You came up here and you didn't break out. Other global markets had a breakout, and it confused a lot of people. This one didn't. It came up, tested, failed, and moved lower. Now you notice a couple different things here. This again being the theory that we'll be using, the high point here down to the neckline, if you will, and then subtract that from the breakout lower. You'll notice you've got a massive sell signal here and a large one. That's important. Whenever you get really large sell signals, they're telling you that there's a really big move coming. So that's important to note. In this situation, you can see just looking at this chart pattern that yes, indeed, you got a big move still coming. Basically, everything that you've seen to the downside is going to be duplicated out again to the downside. This basically distance. Quick glance here at the VIX, or the inverse of the S&P 500. It basically tracks that way. And this is, in case you don't know, the volatility index is actually how smart money is managing their options. If they're confident about the market, then you'll see the VIX falling, and because they're not buying a bunch of options to protect themselves, they're confident. When they're not confident and they're concerned that the market may be peaking or something like that, they'll buy a bunch of options, and that's what drives up the VIX price. And so that's what's really going on here. If you look at this, you should see a bullish condition if you're bearish on the S&P, and vice versa. In this case, we are bearish the S&P, so we look at this chart and we can see very clearly you have this nice little pattern set up here, a very bullish condition. This is basically just a cup with handle or a cup situation. I look at it more as a cup situation here and here, basically. And we've now broken out. We closed above that very strong move here. Notice that the low point here is finding support at previous resistance, and we're just now getting started to take off to the upside. Massive move here on the VIX, which means very massive move on the S&P, just in the opposite direction. Again, we can measure this distance out from the low point to the top resistance point here. We measure this out mathematically and get a target for how high we expect price to go in the VIX. Also, that should be in line with what the S&P 500 is going to be doing, so it should be pretty clear what's going on in these markets right about now. Quick glance here at the Wilshire 4500. Same basic overall story we've talked about in other U.S. market charts. The U.S. is really sitting in a situation where it's really nasty because they're more overextended than the other markets, and they can't maintain that. We know that, and so they're falling apart here, and that makes a lot of sense. We talked about that before. Told you when they broke through here, bulls would realize they were wrong and start running for the exits, and that's what's happening. That's why the candlestick formation is much larger than you'd seen before. The bears are just becoming that much stronger. Again, I want to point out the same overall condition. A bounce here, kind of new high, didn't make a difference. Start to roll over, and we're going to come down and test this low. Again, no hammer candlestick formation off the low. The end result will be this distance here out the bottom. Okay, if there was anything in tonight's market analysis video that you did not understand or you want to know more information about, you can go here to the Technical Trade School, and we have videos showing you different technical patterns that you might use and knowledge that I have that I'd like to share with you. Okay, it's 100% free, so check it out whenever you like. All we ask in return, please refer a friend. Also, I've been getting a lot of emails today. People saying, hey, you're awesome. Thank you for your analysis and all that. I know my analysis is good. Don't tell me, tell a friend. Okay, quickly go over here to the market chart section. If you want to see the short-term charts I've just drawing on, I update them nightly, as well as advancing my stop loss limit and marking the chart for any different sell signal or something like that that I might see, or buy signal whenever they show up, and that's always there, as well as my long-term charts, and that's important as well because they're all breaking down. Okay, God bless, take care. I'll see you in tomorrow's market analysis video. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.